Good morning. How's everybody doing? This is the Flow Show. I'm Sean McLaughlin. That is Steve Straza. Straza, how was your weekend, buddy?
I had a great weekend. How was yours?
My weekend was fantastic, but I have to tell you, I didn't pay too close attention to the NFL this weekend. But I did see a headline. I saw, I saw like the stats crawling across the bottom of the screen. And man, I'm glad to see that the writer's strike is over and they finally found a role for Danny DeVito. He's
Dude,
back. He's
I was
starring as the Giants quarterback. This is great news for you guys.
I was hoping this is what you were going to say. He's the new king in New York, so Tommy DeVito, third string quarterback.
Oh, it's Tommy DeVito. I thought it was Danny DeVito. See what I know?
He sounds like a gangster. Local guy, lives with his mom. Makes, he makes like 40 grand a game. But yeah, 3 touchdowns, 0 interceptions. He's the talk of the town right now. It's exciting.
Oh man, is this going to be another? What was that quarterback from the St. Louis Rams that just lit everybody up 20 years ago?
Kurt Warner?
Kurt Warner. Is this another Kurt Warner story?
Sean, as a Giants fan, I can only wish it's a Kurt Warner story. I don't think so. It probably won't end well. It's not easy, being in New York. He had 3 touchdowns and 0 interceptions yesterday, but if it's the opposite next weekend and he throws 3 interceptions, they're going to be all over him. But for
Of
now,
course.
if he turns out to be a Kurt Warner, fantastic. That means more Super Bowls for us.
Awesome. Well, hey, I'm rooting for you because you're in a different conference than my team. So all the more power to you. Maybe if you beat up the Eagles, that would help. But hey, this is not football conversation. This is stock market conversation. This is the new reconfigured Flow Show. We talked about it last week. We got all excited. We had a hot show last week. We are unconstrained. We can go anywhere for new trades. And right before we went live, we were talking about how I've been saying it for the last 2 weeks. The pain trade is on and it's real and it's sucks for so many people. That's why it's called the pain trade. And let's talk about why it's called the pain trade.
Yep.
The market has been just grinding higher for the last 3 weeks. And I would argue, Straza, with the exception of maybe JC, nobody's happy about it. This is why it's the pain trade. Why is nobody happy? Well, first of all, the Bears obviously are getting killed, right? The Bears got overly aggressive when we were back at lows. October 27th was the bottom. Look, I'll fully admit it. I was not bullish at all. I wouldn't say I was aggressively bearish, but I was definitely not bullish. But there's a lot of people that leaned into the bearish trade who are just getting their faces ripped right now. And if they haven't already ripped the Band-Aid off, they are in a lot of pain and it's only going to get worse. Meanwhile, the Bulls, they're not having any fun either because the Bulls are afraid to buy here, right? They're just like, oh, things have gone too far, too fast. And they're just watching their stocks like Uber. We were talking about Uber just ticking higher day after day after day. And they're suffering because like they want to get in, but they don't want to pay these prices. So nobody's happy. I'll argue that nobody's happy right now. What do you think, Straza?
I like it. It's a good take, right? And we talked about it last week, Uber specifically, and the likelihood or unlikelihood that it would retest, right? Because what we were saying was if this really is a pain trade type of market, probably don't get the retest. And that's what you're saying about bulls not having a good time. When I think of the pain trade, it reminds me of another thing we often say, which is that the strongest bull markets or the best rallies are the toughest to get into.
Yep.
Right. And we're just melting higher. Let's start with the NASDAQ 100, right? Let's lead with the leaders. 14 of the last 16 sessions green. So that's the point. You're not getting any weakness to buy. You're not getting any throwbacks or pullbacks to buy, right? Today, we gapped higher last week, right? And look at the way we corrected. This was a correction in the NASDAQ from Tuesday to Friday. 4 days in a straight line sideways. And now what? A little bull flag resolution here, taking out the highs from this summer. Got to zoom way out now on this. Highest level since January of 2022.
Ooh, that is a sexy looking chart there, Straza.
And if you want an idea of where something like this goes, you look at tech, right? So like XLK, zoomed out, showing the same time frame here. Already back above that key level. Oops. but it's a good chart. Anyway, last week we did Micron. We talked through a long idea on Micron.
And I'm
Last
still liking
week-
it. Look at that chart. I mean, here's an updated chart where you got one, I got one. It's looking good.
Yep. Like everything else, just kind of steadily grinding higher.
Mhm.
You shorted Lilly last week. You put a bearish bet on Lilly.
Not working yet, but also not working.
we got long uranium. Listen, the thing about Lilly, the fact that it's not ripping higher in our faces in this kind of tape, might be something there. You know, this doesn't look like Uber.
No.
You got all bulled up on, I believe it was Next Gen. Looks like we're getting confirmation of that breakout today.
Ooh, that one's looking good.
Let me throw it up quick, right? So that's what that looks like. Kind of what got us interested in Next Gen. This is Next Gen relative to uranium. I threw out some ideas last week in the analyst meeting. I said, why don't we buy something really junky? Like some lower bounds type of stuff, some squeezy type of stuff. Nobody really liked it.
Nobody really liked it? Which one was it? Remind me what it was.
I think I use Unity Software as the example. Something like, you know.
Yeah. I just feel like, I mean, look at that chart, man. It just feels like it's stuck. I mean, sure, it could bounce, but I feel like that's going to be a wild ride if it gets back up to 47. It's not going to be easy.
So with these mean reversion trades, I mean, kind of make a good point. You want to keep them tight and have a shorter time frame, right? They should work quickly, and you should be out just as quickly. But here's what we're seeing. The reason why trades like this are interesting me right now. Here's ARC Genomics. I was just oohing and eyeing at the price action in CRISPR before we got on here. This is the kind of stuff we're seeing. I mean, talk about a tough trade. Ripping higher, back above these pivot lows. I think there's more juice in a lot of these. Micro caps look similar.
Okay, well, you hinted at something just a second ago. You said that looks like a hard trade, and you know, I've been pounding the table about hard trades for the last couple of weeks, saying that I want to be in the hard trades because I feel like those are the ones that are going to pay. But I'm gonna push back on this here. To me, that doesn't look like a hard trade. Buying that dip or playing that mean reversion. To me, that feels like the easy trade. That's the people who are lazy saying, oh, these things have to bounce. Everything else is ripping out. I'm too afraid to buy the Ubers, so I'm going to go buy this thing that's still beaten up. To me, that feels like the easy trade. Maybe I'm wrong, but I don't know. It feels like the easy trade to me.
Fair point.
Uber is still the hard trade, and Next Gen is still the hard trade. Nobody wants to buy these new highs after we've ripped higher for the last 3 weeks. Nobody wants to buy them, but these are the ones, man.
I agree. I think these cryptos look good too. I mean, here's Coinbase, another one that we like. Some people
Speaking of Coinbase and crypto, there's a comment there about Mara. Someone's pointing out that Mara's got a 25% short interest, which I love high short interest, but I'm gonna lump Mara back in that other, what I was just saying about this actually looks like the easy trade to me, not the hard trade. And you had Caleb Franzen on the show this morning talking about you touched upon why aren't the miners ripping here with Bitcoin doing what it's doing. And no one really knows.
So
maybe you do.
Caleb has a good theory about it, which is simply that with the halving, they need Bitcoin to be a lot higher than it is today to be profitable or to break even, right? So the market seems to be pricing in that won't happen. But if we start to see Bitcoin around 50,000, his theory is that then they're in a position where they're more than breaking even, they're profitable, and they're going to be like call options. For me, if the market begins to price that scenario in, we'll see these things wake up and we can get long then, right? There's no reason to jump in. We're technicians, right? We got to see that all sounds great. Let's see price prove it to us first, then we'll get involved. For now, this is the situation. MicroStrategy, 55% in less than 2 months. Coinbase, 50%. Bitcoin, 40%. Marin Riot, not even half of that. Yeah. So, and there's always a huge short interest in these names.
Yeah. I believe me, I love getting long stocks that have big short interest, but I'd rather get long them when they're near highs than when they're coming off the lows. The earliest, at least right now, the earliest I would get in tomorrow is we have to at least break above 14. You can see it on my chart here. 14 acted or near that 13, 14 level was resistance back in April, was again in August. So at the very least, and even then, I don't love the trade, but I mean, I'm not, for me, it's hands off until we're above 14 minimum.
There are other crypto stocks that are really working. Just those are your vehicles for now, right?
Yeah.
Stick with the ones that are working. Listen, do you want to stay away from tech? I know you're into these portfolio diversifiers lately.
No, I don't have an aversion to tech right now. I don't feel like I'm heavily weighted in tech. And maybe I'm not enough weighted after you showed me that XLK chart just a few minutes ago.
Let's find you a tech stock. All right. So one easy way to do this, just rip through the new highs list. I'm just looking through the new highs in software right now. Microsoft, Palantir, Zscaler. I got into Palantir last week.
You love that story in Palantir. You've been wanting to get long that thing for, I feel like, years now.
Big fan.
I know you're a big fan. Hey, nothing wrong with that. And the chart's backing you up. Look at that chart. Wow.
Yep. Just looking through here. Oh gosh, Sonos ripping. Are you in Dell, Sean?
I am not in Dell.
We
talked about Dell recently.
Yeah.
Why did we pass that? I think it's got earnings coming up. That's why. We talked about that at a recent meeting. Let me see.
You're right, man.
Yeah, earnings next week.
I'm seeing tomorrow.
I see the 30th, but you know, these things are fluid.
All right, so maybe we revisit. We could talk about this one next week, but gosh, it sure does look good heading into.
Yeah, if you see on my screen here, at the bottom of my chart here, you got the implied volatility. I mean, that's juiced up pretty high right now. I mean, that's telling us that earnings are definitely coming.
Yeah. Yep. Okay. Let's look at another old legacy tech stock. I mean, JC thinks I'm crazy, but Sean, I'll bet these options are cheap as hell too. So this is Big Blue, IBM, former Bellwether.
Mm-hmm.
Not really sure what they do now. Maybe they'll finally make something out of this Watson thing.
They got a big campus here near where I live here in Colorado. I don't know what goes on there, but it's like, I mean, it's like, it looks like a university campus. It's huge.
Such a big company.
Yeah, I don't know what they're doing there.
Look at this. I'm zooming way out here. This all the way back to like 2017. It's a monster base.
I like this, and you were right. Options are pretty, not the cheapest, but affordable. Like if we wanted to keep it simple and buy calls and something like this, we could totally do it. And you know me, Straza, I love buying calls in stocks making all-time highs. Now I know this is not an all-time high, but it's definitely a multi-year high. So these are the types of trades I love.
Monster base. I would go out. Good deal, at least to middle of next year. Give it some time, right? Because these big base breakouts, they often retest, they dance around at the breakout level for a while. But once that, reaction like higher does come underway, you want to own them.
Right? Graza, check this out. I think you're going to like this. The June 170 calls. Mm-hmm. You could probably buy those right now for about $2.90. $2.90.
Oh, it's so cheap.
Yeah, so I like that.
So running back to the highs from 2017, which look like the next stop here, it's at about 174. That's the first level I would look to, right, on a breakout from this kind of a chart. It really looks like we're getting that breakout like right here, right now. We're talking about from current prices, 13 or 14%. Gonna put those options nicely in the money.
Money. June 170 calls. Right now they have a 25 delta, which is my sweet spot for buying long calls. You could get them for $2.90, maybe a little cheaper if you work the middle. plenty of liquidity there, plenty of open interest, tight bid-ask spread. It's got all the ingredients, Straza. Got all the ingredients.
What's the open interest? I can't see.
I see 862 contracts, which, that's fine. The bid-ask spread it's currently bid 283, offered 290. So I mean, we should have no trouble getting in and out of this contract if we want to trade this one. I like it. I like it a lot, actually.
I would love to put this on. We're talking about like 12, 13%, not even to get to 170. So you don't need much, and you have 7 months, and this is a fresh monster breakout. So
yeah, I like it. Now, Straza, you may have noticed something that has shifted with me in recent months. And it has a lot to do with a book I read recently. I told you about it. I hope you picked it up. The Best Loser Wins by Thomas Hogarth. I mean, he's not telling me anything I don't know, but it's always good to be reminded of certain things. And he is really kind of pounded into my head that setting a limit on my winners over the long run might not be the best move for me. And I look back at my trades over the last couple of years, and I've looked at a lot of the best winners that we've had. And a lot of them have been like long call trades where we had theoretically unlimited upside, but we took profits or we sold half along the way. And I don't regret doing that, but man, if I look back at it, I did leave a lot of profits on the table in some of my best trades. And so I'm saying this because I was going to ask you, like, what's your price target on this thing over the next, 4 to 6 months? But I'm almost of the mind of, do I even care? Like, I want to just get into these things, and if they're working, I want to hold them. That's kind of my attitude right now. Maybe I'm wrong, but that's where I'm at.
But then, so how do you do that? Like, what if they stop working? You just put a trailing on them, right? Like how?
So, yeah. Where I've kind of put the middle ground on that, I haven't fully committed to riding every position to the moon. But you and the analyst team are really good at setting price targets based on the technicals that you see, and I'm using that input as a first. We'll call it a notice level. I don't have a phrase for it, but like when it gets to that level, let's say I'm making this up, but let's say you have a price target of 200 for IBM. I don't know what your price target is. Doesn't matter, but let's just say it is, right? I'll set an alert on my trading platform. And if and when IBM gets to 200, at that point, I'm going to look at my position. I'll be comfortably in the profits at that point. Where I'm at now, Straza, is when I get to those price targets, what I will do more often than not is I will sell a portion of my position. I used to sell half when I double, right? That's kind of my best practice. I would always sell half when I've doubled my P&L or doubled my investment. Instead, now what I'm doing is, let's use this IBM example. If it gets to 200, let's say I bought 10 contracts, right? And the stock gets to 200. Well, what I'm doing now is, instead of selling half of my position,
taking your cost back.
I'm getting my cost back. Exactly. So if it gets to 200, I'll sell 1 or 2 contracts out of my 10, and that pays me back my investment, but I still have 80% of the position on, and I'm riding for the big win.
I like that, Sean, because it's the same reasoning, right, as taking half off on a double. It's that you want the free ride, but now you're at least, that's very arbitrary, right? Half on a double. Now you're at least using the technical, some sort of level of interest, and saying, okay, I just want a free ride. So what do I need to close to give myself a free ride? That's what I was going to say to you, that I don't know if I love this idea, because I just psychologically, when I know it's a free ride, then I leave it alone. And that can oftentimes turn into a big winner because you don't worry about it. You do let it go. So I like the idea of getting that free ride back, but I think this is a better way to do it.
Right. And look, the people who are smart at math out there will point out, and they're right, that doing this impacts my win rate, right? Like, I'm definitely going to win less often when I do that. But that's the trade-off that you pay to have the bigger wins. And all the smartest traders I know will tell you that, hey man, I might only win on 30% of my trades, but my wins are 4 or 5 times larger than my losses, because they're letting their big winners run. And that math works over the long run. It works very well.
from my experience, when you do just let them go, there's nothing wrong with this. You'll get crazy lucky sometimes. And
Right.
options are juice machines, right? So the power of owning an in the money call when a stock gets good news or beats earnings and is up 20%, you're talking about monster trades that can drive your, yearly P&L when you
Right.
allow for that chance.
And you're right. There is a little bit of luck involved in that, but that's luck that we created. We're creating that luck.
Yes.
It's not luck in a vacuum. It's not like playing slots. This is, we're following a process. We're positioning ourselves in the right trades where we have the potential to get lucky.
Yes.
And yes, we will get lucky from time to time. And that could make all the difference.
I totally agree. I like it.
All right, folks. Well, hey, we love IBM. We love the June 170 calls. You can get them for around 290 right now. I think that's a trade we're going to put on in the books this week. Thanks for tuning in. This is the Flow Show. He's Steve Straza. I'm Sean McLaughlin. We will do this again next week. Take care.
Monday, everybody.
Hey, happy Thanksgiving, Straza.
You too, my friend. Yeah, short week.
All right. Take care, everybody. See you next time.